Ladies and gentlemen, I welcome you all to the H2 and FY25 post-earnings conference call of Solex Energy Limited. Today on the call from the management team we have with us Mr. Chetan Shah, Chairman and Managing Director, Mr. Piyush Chandak, Full-Time Director, and Mr. Vipul Shah, Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended 31st March 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Okay, hello everyone, and welcome to this con call for Solex Energy Limited. Basically, we have, I think, interacted earlier also, and we have discussed about our vision, the industry outlay, the Solex vision, and the roadmap and everything. So, just giving a brief about Solex, just to not repeat all the points, but still, we're celebrating our 30th year in renewable energy business. We started our journey in 1995, and now basically, we started as a thermal manufacturer, thermal technology manufacturer. Got into the photovoltaic in 2007, and so we are one of the oldest photovoltaic module manufacturer in India, with a very small capacity, with the focus of majorly on EPC, particularly on the government sector. Post 2021, we diverted ourselves into as a model manufacturer, and so today, in fact, we are operating at 1.5 gigawatt capacity at the of P-type and N-type models. We have a 2 production line operational, and another 2.5 gigawatt is getting added from September end, which will be beginning of October. So we'll have a cumulative capacity of 4 gigawatt by that time. And so as per our vision 2030, which we declared in October 2024, Solex wants to establish 15 gigawatt of module and 5 gigawatt of cell manufacturing, which includes 2 gigawatt of N-type TOPCon and 3 gigawatt with other technology. So this is the quick background, in fact, which we have given, which is our major focus on the manufacturing. Our subsidiary, Solex Green Energy Private Limited, which is focused on EPC business. So we have done wonderfully well in the previous financial year, and so the major focus was set to the ground-mounted utility scale projects, and that is how, which is reflected in our results also. There are many other projects are yet to be executed in this financial year. So and new projects are also getting added in this. So I think current financial year also will have good numbers coming from EPC and of course from modules also. So as per market requirement, we are expanding, and in terms of technology also, our all production lines are upgradable to cope up with the back contact technology and HJG technology, which so we will be able to provide the very high efficiency modules for the Indian projects and overseas projects as well. Currently, our major focus is on India market. Previous year, we did export small numbers to Europe, particularly Germany and Africa. And now we have set our focus to USA market. And so basically, we are looking forward to have some good orders coming in from US market next year. And, so basically, we will have 2 major markets, where we will have a presence, which is one is India and another is US market. Yeah. So that is other briefly which I have summarized this. Now, regarding our previous year results, Vinit, are we discussing previous year numbers or it's just an introduction that
No, you
which I have
can do
to?
that, sir, definitely. Previous year numbers and the business developments also.
Okay, right. So, as far as previous years is concerned, like we had a wonderful year last year, and which was like quite a growthful year, in fact. Though our second production line, we could not generate numbers, we could not put it in a production, in January because of the technological changes and other challenges. So which got operational in month of March. So which, the numbers will get reflected in this year. Though we have been able to generate revenue of 665 CR, which is 81% more than the previous year revenue. So which was quite encouraging numbers for us. And of course, which has helped us to increase our EBITDA margin to 157%, which is the growth compared to previous year. So last year financial year, we reported 73 crore EBITDA, which is almost equivalent to around 11% of EBITDA. People buy. And our PAT margin has increased to 390%. So compared to previous year. So rupees 42 crore was a PAT, which is almost equivalent to around 6% of 6%. And of course, the earning per share, which has increased by 301% compared to previous year, which is 43 CR. So I think these are the numbers which we have already shared and displayed previously. So these numbers are basically quite encouraging numbers for us, and uh, this will not. This will basically, the new expansion and the second production line. The numbers will be reflected in first half H1 of current financial year and H2 current financial year. So I think this is where Solex journeys and the future roadmap is. Yeah. So on just give you the further detail on breakup of the revenue, that is 665 crore, which we have discussed. The breakup is the revenue from module, which has increased from 283 crore to 497 crore. 283 was a sorry. Yeah, so there was a change of revenue there, which has 32% increase. The revenue for FY24-25 was 497 from module. From EPC, the cumulative revenue was around 104 CR. And the other revenue, other sales and the job work revenue was somewhere about 2 CR. So total 600 out of 662 CR. This is a breakup. 497 came from module and 105 came from the other revenue. And so this is a breakup of our revenue. These are the consolidated numbers. So yeah. So I think that's it from my side. In case just we can take up other things in a question and answer, or in case anything which is missed out, Vipul you can add, or Vida you can add.
So, good evening, gentlemen and ladies. Like Chetan Bhai said, the second module line, which we had estimated to start in Jan 25. It started in March 25, and that's the reason we have not been able to reach to the estimated turnover what we had targeted around 800 crores. So precisely, if you calculate the loss of production for 2 months and some challenges in the month of March when we started, had we been able to start in Jan, we would have easily achieved a turnover of 800 crores. Also would like to mention that the numbers what we have achieved is only through one line, because second line we just started in the month of March. So next year we'll be having 1.5 gigawatt for full year, and the additional uh, expansion what we are doing, we have targeted to start it from October onwards. So 1.5 gigawatt for the full year and the remaining for 6 months. That's it. Plus, as Chetan informed that we have a dedicated subsidiary for EPC business. So all private sector business like CNI, ground mounted rooftops for private sector will be dealt by the new subsidiary what we have incorporated. And government EPC business, because of the government norms and the tender criteria, will be continued to execute in the holding company. And with regards to expansion, we are also planning for setting up an 2 gigawatt cell line, and a lot of things are under development. As and when concrete things happen, we'll inform in the public domain. That's it. Whenever we can start the Q&A or.
Sure, sure. So all those who wish to ask a question may use the option of raise hand. We'll invite you to ask the question. In case you're unable to do that, please drop a message on chat and we'll call you to ask the question. We take the first question from Pranjal. Pranjal, please go ahead.
Am I audible?
Yes, yes.
Okay, so I have one question. So earlier the company had guided for revenues of 2,400 crore in financial year 26 and 3,200 crore in 27. And considering the shortfall in financial year 25 performance due to some delays, would you like to revise or reaffirm the revenue guidance for this year's?
So, hello Pranjal, Vipul Shah this side.
Yeah.
Like,
Yeah.
we have mentioned that why we were not been able to achieve the financials for the financial year 25. Uh, for the current year, we are not seeing any major issues, and we are targeting the turnover to range between 2,200 to 2,400 crores. And so you can say 2,200 plus, which will include the EPC business also. And looking to the production capacity of 1.5 gigawatt for the full year, and the balance for the 6 months, we feel that we'll be able to achieve the projections. So we don't think any need further reduce the
Oh.
target.
Pranjal, there's some
Okay.
disturbance in your background. Can you?
Okay.
Yeah, go ahead, Vipulji.
Yeah, that's it. So I don't think so. We need to do major changes to it. It can vary between 2,200 to 2,400, depending upon the market and the price range. And similarly for the next financial year, that is FY27.
Okay, thank you.
Thank you, Pranjal. We'll take the next question from Vikram. Mr. Vikram, you can unmute and go ahead, please.
Good evening, sir. I have
Good evening.
I have two questions. Sir, if you look at our margins, it's around 10%, whereas the competing companies have a better margin. May I know the reason for that, sir?
So current
No,
year, yeah, Chetan please.
yeah. So, what is that better margin? So that needs to be defined. And
Sir, I see around 15 to 16% is the margin achieved by other listed companies, module manufacturers, whereas our company has achieved a 10% margin.
Yeah,
So,
Vipul bhai.
yeah, so Vikram, firstly, current financial year, our EBITDA is around 11.5 and PAT is 6.4. So I think so we have outperformed what was our estimate. We had estimated the EBITDA margin between 9 to 11%. We are at 11.4. Similarly, PAT we had identified around 5%. We are at 6.4. So according to us, how other players are doing it, we don't know. But according to us, looking to the industry and this for Solex, we feel it is an numbers which we try to maintain. That will be good for Solex.
So the current margin will be a long-term sustainable margin for our company.
Yeah, so you know,
Yeah.
a lot of things depend upon the market dynamics, and if the dynamics change, it will change for the entire industry. But at present, we see we should maintain this range.
Sir, okay. My second question is that you have guided us a revenue of 2,200 to 2,400 crores for FY26. Do you have an order book for this?
Yes, so our existing production lines are completely booked. We have firm orders for the new lines also, and a lot of MSA have been signed. But in the industry, you need to give the exact delivery schedules. So when the machines start, arriving at the floor, then we can give the exact concrete date and we can sign the POs. But as and when we have got confirmed POs, we have been informing in the public domain.
Sir, my third question is cash flow from operations is negative, and I see increase in receivables and inventory. Can you throw some light on it, sir?
Yeah, so Vikramji, as you are aware that the second line just started in March. So when you compare, you are comparing the inventory and everything for the one line, whereas we have to build the raw material, raw material backup for the second line also. So that's the reason you are seeing increase in the
Yeah.
inventory.
So I mean, our inventory is high just because of the inventory which we have procured to operate the second production line, and which is not reflected into numbers and which was not billed to the client. That's the reason you are seeing that inventory. The production line which is not commissioned and not put to in as a commercial production, though we have to procure inventory, so that's how it is high. Yeah.
Similarly, for debtors in the month of March, our turnover was 135 crores, and a lot of EPC has also contributed to it. And there are some debtors which we are recovering in the current April and May month. So one more reason for higher debtor you see is because of the very good sales in the month of March. And this is a common feature across the industry. Generally, Feb and March are the months whereby there is a huge sales are there. So
Yeah.
the reason.
Thank you, sir, and all the best.
Thank you.
Thank you.
Thank you, Vikram. We'll take the next question from the line of Rajesh Saini. Rajesh, you can unmute and go ahead, please. Hello, Rajesh. We'll take the next question from the line of Hardik Gandhi. Hardik, you can unmute and go ahead, please.
Hello. Yeah. Am I audible?
Yes, Hardik, you are audible. Let's go ahead.
Yeah. So a couple of questions. Just I was looking at this recent CRISIL report, and there it was mentioned that we are highly concentrated on the single client to the span of 1,020, like 1,300 crores from a single client of the total order book of 1,450 crores. So could you share some light on who the client is, or why are we concentrated so much onto a single client?
So Hardik, this data you are quoting from the rating, this rational, right? So
Yeah, CRISIL report
yeah,
from 8th May, which is like 20 days
yeah,
back.
yeah. So again, by the time that this was announced by CRISIL, we have some other orders also which we have published, which we have informed to the exchange. Similarly, we don't mention small orders, which are, 3 megawatt, 5 megawatt, 10 megawatts. The smaller ticket size we do not announce. So there are a lot of other smaller orders also. And this particular order is being taken keeping in mind the new lines, the third and fourth line which is coming on. So that's the reason. But current order book is very much stable, and there are a lot of inquiries. Not only inquiries, we have signed the master sales agreement. But unless we receive the POs or we sign the POs, we are not announcing it. So I think so. Whenever we update within 1 or 2 months the other orders which are in the pipeline, you will see this dependency on this single order will come down to 40% or maybe lower than that.
Understood, sir. Sir, and I can see there's a good debt which is being brought up
Can
on the
you
book.
you're not audible? Can you raise the
Yeah, is it
You
is
have
it
to be a
better?
little loud on this. Yeah.
Yeah, is it louder now?
Yeah.
this is fine.
Yeah. So I see there's a good amount of debt which is there in the books, 150 odd crores. And given that we are doing a side-by-side capex and we are planning to do a solar cell expansion also, what do you think will be a good uh, capex plan? And second is the debt levels which we are going to go up to.
Like, if we are planning for a cell line of 2 gigawatt, and we are also planning, like, looking to the demand, additional 2 gigawatt of a module line also. So we consider an average 1200 crore cost for the cell line, 200 crore for the module line, and approx 100 crore for the working capital, which comes to around 1500 crore. This is the ballpark numbers. Obviously, things will depend upon how much Chinese line and the utility German or the European technology we go for. But this is the number at present. We are working on the technology part in this. Out of this 1500 crore of capex, we target 1000 crore of debt and 500 crore through equity.
Understood. So there will be a further dilution of equity. And what will be the timeline of this expansion? I think we've been mentioning the solar cell expansion from some time now.
Yeah,
So
so
any
you
timeline?
see there are a lot of development happening in this segment. A lot of existing players were struggling in achieving the desired output and efficiency. So at Solex, we give very importance on the technological tie-ups, and we were evaluating how things are happening with the other players. So now we have reached at a very comfortable level. We have identified some 2, 3 parcels of land. Some very key technical person has also joined. So within a month or 2 months, you will see very good development happening at the cell manufacturing side.
And what is the time required to start?
So it
Like
takes,
just
18 months you can consider from the zero date.
understood, understood. And what would be a good revenue bifurcation on a going forward basis where we did given that we are doing EPC as well as manufacturing. So will it be a 80-20 split where manufacturing is the 80% or what will be the good split?
So EPC, we have kept the target of around 200 to 300 crores for the EPC.
For
Rest,
annual basis.
rest every
Non-annual basis. Yeah. So it will be anyway around 10 to 12% of total revenue.
And what would be a maintainable PAT margin if we can expect, given that we are expanding, so there will be a benefit of scale which we'll achieve. So any guidance on the PAT margin, what would be at least a sustainable one?
Yeah, so like you have heard in the last calls, we were telling it around 5% of PET, and we have achieved 6.4 this time. Similarly, with the scale of operation and this, it should improve. But still, we like to mention that it will be between 6 to 7%. But we are sure
Understood.
looking to the efficiencies ratios what we follow at our production level when it comes to cell efficiency or the module manufacturing efficiencies. We are sure that it should improve, but from your perspective, you can consider it between 6 to 7%.
Understood. And just one last question, if I can just squeeze it in. Given that there is expansion on multiple levels by a lot of big players as well as the small players, Uh, do you think in a year and a half, solar modules will just be a like it will commoditize, given I know there's a huge demand, but at the same time, people are ramping up their production levels on a very big scale. And along with that, given that in the US, since we are targeting US as an export, a lot of Chinese companies already have their foots placed in US, and given that how big, I think one of the biggest players has 100 gigawatt capacity, so the economies of scale even after tariffs for them would not be so high. So just wanted to have your perspective on the industry as a whole, if it will be commoditized and will there be pressures which we will receive in a year and a half going forward.
Chetan
Yeah,
bhai,
Pratik.
yes, Chetan bhai.
Yeah, Pratik. Basically, the industry has Indian manufacturers. They have seen the toughest time previously, which was like where the 90% of the modules which were installed in India were imported from China, majorly from China, right? And that is the time that industry has seen. Uh, uh, Till 2019, the Indian capacity was 6 gigawatt cumulative capacity. I'm talking about the module manufacturing capacity, which was 6 gigawatt. Then we had 2 years, disturbed years due to the pandemic, which was 2020 and 2021. And after this 2021, the Indian capacity now today it is 100 plus gigawatt. So that means what? 6 gigawatt to 100 plus gigawatt in 3 years time. That is the growth that India has seen. Indian installation, which was anywhere between 8 gigawatt to 12 gigawatt annually, which has increased to almost about 28 to 30 gigawatt.
Correct.
Per annum. So the demand has surged drastically. And basically, now if you look at the complete global market, then after India, the US is also one of the very big market. Now, USA is a challenge. In fact, USA is a challenge. Why I'm saying the challenge? It is because the costing of modules. There are some of the factories which are already operational in USA. First thing is which are not sufficient to fulfill the demand of US. Number one. Number two, the cost of operation of US factories are much higher than the cost of operation in India, and then giving a tariff and export to the USA market. Though Indian models are cheaper. If we have to compare the Chinese price, there is no export happening from China to USA and to India. So because of this, in Indian market because of ALLM, I think it has opened the door for Indian manufacturing, domestic manufacturing, and to export to the other continents. So the current capacity and the capacity which is being expanded are sufficient enough to fulfill the demand of Indian market and as well as the overseas market as well. Overseas market, I am referring to US will be the major, but then other continent as well. So I don't see any challenges in anyway, the product is already, the way it is being sold, and it is a commoditized market, but still, the capacity, there is a demand of capacity. Apart from that, this whatever that gigawatt we call, these are the nameplate capacities. So there is a gap between nameplate and the actual production capacity due to the various technical reasons. So when we say we have 100 gigawatt module manufacturing capacity, the actual throughput will be much lesser than 100 gigawatt. And these are the new players which are coming. So they will take their own time to ramp up and reach to that optimized capacity. So at present, for coming few years, I don't see a challenge in the pressure on due to the multiple manufacturers. Everybody will have a sufficient business, and particularly for Solex, since we are quite ahead in terms of technology, and we have establish ourselves as one of the most reliable manufacturer globally because of the manufacturing standards which we have established. We have an edge over other manufacturers. So it is just matter of how fast we ramp up our capacity and take the maximum pie from the cake. That's how it is. Obviously, now this will give an edge once we have a cell line. So most of the module manufacturers, there is a huge gap between the supply and demand for cell. And government is also planning to introduce, they have already announced, so they are planning to introduce ALCM very soon. ALCM is for the cells. So that means after ALLM for modules, the ALCM will be there in a picture. And then those who are having a cell line will have an edge over the people having only module lines. So for Solex also, it is very important for us to get into the cell manufacturing. And we have already initiated our work on that. Thank you.
It will be a incentive. It will be a period. It will be a production
Hardik.
base. Okay, sorry. Yeah, I'll just leave the thing
Hardik,
for the other
please.
question.
I would request to please join the queue, and I would also request other participants to please limit yourself to 2 questions since there are many in the queue. Thank you. Mr. Dhaval Bari, you can unmute and go ahead, please.
A very good evening, sir. I am having 2 questions. The first one is how much is the current capacity utilization and what is the conversion per megawatt?
No, what do you mean? What do you mean by the conversion per megawatt?
Like per megawatt install in your factory, how much revenue you are getting? The realization per megawatt.
Realization per megawatt. Okay, fine. So the current efficiency which we are working with right now is almost about 70-75% of our capacity because of our order book, and where the other manufacturers are basically as per the numbers which I have, they are operating somewhere about obviously good manufacturers are having 70% efficiency, and then some of the manufacturers are operating at around 55% of efficiency. So that is the answer to your first question. And when it comes to conversion, it is basically a market dynamic and order based this thing. We used to do OEM for some of the leading brands on a conversion model previously, which you can see this year. Like we have not. We have most of the products were sold with the Solex brand only. So there is no job work which we do. So the conversion is always, it's a minor market dynamic. But the numbers which we have declared, which itself says like the EBITDA margin and the PBT margins. I hope I have answered your question.
Sir, so as per my knowledge, like you are doing one shift in your factory. So this 70 to 75% utilization is from one shift, right?
No, we are doing 3 shifts in our factory. We are operating 24 hours.
Like in 3 lines.
Means?
Like in your factory, are you doing one assembly line or like 3 assembly lines?
No, we are having 2 production lines, and both productions line are operational 24 hours.
Yeah, okay, sir, got it. And so my second question is, how will the company be able to source its cell from once the ALM list 2 is like implemented? Like if the supplier increase the price, there will be a threat on your margins level, right?
Just come again, Dhaval.
Okay, so like how will the company source its cell line once the ALM list 2 will be implemented? Like if the supplier increases the price of the cell, there will be a lot of like margin threat on your EBITDA margin and PET margins for DCR.
No, there won't be. See, market is so dynamic. So if the cell supplier increase the price, the module price will also get increased. All the contracts are, having the clause of change in change in the government laws, a change in fluctuation in prices and the dollar. These are the all orders are linked with the dollars also. So for module manufacturer, there is no price risk if there is a fluctuation, heavy fluctuation in raw material pricing. It is a standard market practice.
Dhaval, so what Chetan bhai mentioned is, so when there is a price rise, the price rise will be for the entire industry. And of what we have observed is that up till now, the whatever price rise is there, it is easily passed on to the customers. So I don't think so there should be any major challenges.
But like right now, you are not DCR manufacturer, right? You are also like importing raw material from outside the country. So once this list will be implemented, there will be like increase in your raw material, right?
By
So
the time we will have our own cell line.
Dhaval, also at present, the manufacturing capacity for cell line is very less. So we are very much sure that the date will extend, because unless you have an operational cell manufacturing capacity in the country, ALCM cannot be implemented. So as and when India has insufficient cell manufacturing capacity, ALCM will come, because you see the historic data. ALM was announced in 2019, but since we were not having proper the desired number of manufacturing capacity, ALM was imposed in 2024. So MNRE and the government is having real-time data of the industry and the production capacities. So we are of the opinion that government will see the real-time data and the ALCM will be implemented.
Yes, I got it. Thank you.
Thank you, Dhaval. We'll take the next question from Mr. Karan. Mr. Karan, you can unmute and go ahead, please.
Yeah, thanks for the opportunity. I hope I'm audible.
Yes.
Yeah, you are
Yes,
audible.
you are.
Yeah, great. Congratulations on good set of numbers, Chetan bhai.
Thank
So,
you.
yeah, so the question was, do we receive for the advances for the orders that we receive?
Do we,
Do
Karan?
we receive advance payments for the orders that we receive?
Yes,
And
yes. All orders are backed by the advance of from the customer.
would it range around 5-10% of the order value?
Yeah, normally it is around 10%.
Understood. Also, one clarification that the credit rating report mentioned that our order book was 1450 crores, but while in the PPT it was mentioned that it is 1756 million. So, was it just a typing mistake in the PPT or?
Can you repeat the numbers? What?
Yeah, so
1756.
1756 was mentioned in the credit rating report. While in the presentation on page number 28, it is mentioned that the closing order book as on 31st March is 1756 million.
So I think so there should be some numbers mismatch. The number published with the rating agency is the latest number. Obviously, as
Okay.
on date, it has increased.
Yeah. So it must be crores, I guess,
Yes.
in the
Yes.
PPT.
Yes.
Understood.
Typographical.
Yeah. Also, just to confirm, you talked about the capex of 1500 crores for the cell and the module line, and the 1000 crores was to be sourced from debt, right?
Yes.
Okay, well, understood. Great. That would be it from my side. All the very best.
Thank you.
Thank you. We'll take the next question from Mr. Swami. Mr. Swami, you can go ahead, please.
I just wanted to confirm, earlier expansion was expected in June, but now it's mentioned as October. Has there been change in the plan?
No, so
There is no change in the plan. It is basically, change in technology, the frequent change in technology, which is we are considering the most modern equipment. Some of the equipments are not ready to be shipped out of the manufacturer's country, particularly China. And it requires a lot of testing locally, and we don't mind changing our execution plan, if it, without compromising having the latest technology. So this change is happening just because of there is a change in a technology of equipment, drastic change in a technology of equipment and upgradability part. So which is safe for Solex, particularly when we go for the most advanced equipment and upgradable equipment for the future technology. And the way the technology is changing now, from N-type popcorn industries, moving to back contact technology and HJT. Mostly the back contact will lead the market, considering its price competitiveness, over HJT. So all our equipments, the new production lines, also they are all most advanced machines. The new machines which we are getting, we have ordered. These are the very highly, robotized and automated machines with the full control of MES and everything. So this is
Okay.
how it is. So basically, the shipment and everything will begin from July, and shipment time and installation time. That's the reason we'll say like commercial production will be out from October.
Okay. My second question is, can you please share the what loan has been already taken? We need a 210 crore for expansion of for 2.5 gigawatt, right?
Yeah, so Swami,
Yes,
we have
it's not a loan; it's a total capex.
Okay. We need.
Now it is around 190 CR capex, which we are doing for 2.5 gigawatt. Yes.
Okay, how the fund is sourced?
So out of the project 150 crore, we are asking for the term loan and balance 150 crore for the working capital, out of which 100 will be fund based and 50 will be non-fund based. So we are raising 300 crores of debt. Like these numbers are on a higher side. Like last capex also we did almost 13-14 crores lower than what we had estimated. So these are the initial quotes we have taken. We are negotiating with the suppliers and everything. But yes, for as of now, you can consider a term loan of 150 crores and working capital of 150 crore, out of which 100 will be fund based and 50 will be non-fund based. And Swami, just to add, like we have been mentioning that the line will be operational from the beginning of the second half year. And obviously the machine delivery will start from July first week. And as Chetan bhai mentioned, the machines which are coming, like the first line was could manufacture module in 28 seconds, the second line in 22 seconds, and the third and the fourth line, which is one of the most latest and modern line, which will produce modules in 16 seconds. So every 16 seconds there will be one module.
Okay, sir. My last question is,
I think
can I
Swami,
visit?
only
Last question.
I will just repeat. Yeah.
Sir, I would like to visit your factory if possible. Let me know when it will be suitable, please.
Yeah, definitely. We'll let you know whenever it is. There are audits going on continuously. So whenever we have a free slots, we'll let you know. So you can send us your contact details. We'll update you with our schedule,
sir.
available slot. Thank you.
Thank you, Swami. We'll take the next question from Kiran. Kiran, you can unmute and go ahead, please. Kiran, you can unmute and go ahead, please. Okay, we'll take the next question from Chandrasekhar. Mr. Chandrasekhar, you can unmute and go ahead, please.
Hello. It's Kiran, sir. Am I audible?
Yeah, you're audible.
Sorry for the delay. My first question is on the receivable side. Can you show some light on how much receivables from EPC and how much receivables from uh, solar module and cell manufacturing?
That data is not readily available. I'll tell my team to check and come back. Meanwhile, you can ask any other question if you have.
That's the only. And another thing is we are on the capex, right? And another 2.5 gigawatt. At presently, at what stage we are in the?
So factory.
As I said, like currently the factory building and everything is constructed, everything is over. The orders, I mean, the equipment orders are already placed. Our team is traveling to China for the inspection of equipment. Equipments are ready, in fact, and so we are visiting China for the inspection of those equipments, and the shipment will be done. So we are all set for setting up our another line 3 and 4, which is 2.5 gigawatt, and which will be operational by October.
Okay, thank you, sir. Thank you very much.
Thank you. Thank you, Kiran. We'll take the next question from Mr. Chandrasekhar. Chandrasekhar, you can go ahead, please.
Congrats on the very good numbers.
Thank you,
So first,
Chandrasekhar.
yeah. So first question is, sir, is there any improvement possible in the EBITDA numbers going forward?
So
right now we are at 11.6. So does that number stay same or will it improve?
Like, any, I mean, it is all the working efficiency, and our focus is always, it remains on a working efficiency. Whatever capacity that we have, we try to utilize that capacity at the max with large scale orders. Large scale orders gives a consistency, and which helps in improving the efficiency of production. So this efficiency will definitely help us to increase our margins, operating cost, reduce the operating cost, and which leads to the higher margins. So I'm looking forward to have a better EBITDA margin in days to come. But whatever that numbers that we have given, there are also very like efficient numbers in terms of what you call the industry standards. Even if you look at the China factories, then also they are operating nearby these numbers only, sometimes lower than these numbers. The Indian numbers are much better than those companies. So now, if somebody is giving some different numbers which are not as per the industry standards, then I have nothing to say on this. But like if you look at the other industries, there are very few listed companies. In fact, there are so many unlisted companies in this peer. If you look at the numbers which are coming from them, these are all the similar numbers. Solex has a better margins, in fact.
Okay. So from this quarter onwards, can we expect quarterly updates, sir? I think
Yes.
we are on track to
Yes.
get into
Yes.
main board. So
we will have quarterly numbers from this same quarter. That is April, May, June.
Okay.
We'll have numbers.
Final question, sir. So I think, I mean, so is it intentionally we are going slow on the EPC, or you can go aggressively?
No, we have a choice to go aggressively, but being our focus is measured on manufacturing. We are a module manufacturer, so that is always we go very selective on EPC part, because EPC is the different domain altogether, and most of our customers are EPC companies. So we have to go very carefully on this front.
Okay, thank you, sir. And very all the best for
Thank you.
FY26.
Thank you.
Thank you. We'll take the next question from Shubham Agarwal. Shubham, you can unmute and go ahead, please.
Hello. Hi. Am I audible?
Yeah, Shubham.
Okay, thank you. So I just had a question. I think initially we had planned in the second half.
Shom, can you be a little bit louder?
Yeah, can you hear me now?
Yeah.
Yeah, I just wanted to ask, initially, I think in the second half of the year, we had scheduled a 2.5 gigawatt expansion. And I think in the press release, it was decreased to 2.2 gigawatt. Was there any reason for this 300 megawatt shortfall?
No, it is basically, 2.2 gigawatt and 2.5 gigawatt, it is the same thing. It is basically what you produce. So basically, if we go for 5T5 watt peak modules, which is N-type TOPCon 5T5 watt peak modules, then it is 2.2 gigawatt. And then if we produce 650 watt peak modules, GTLR technology modules, then it is 2.5 gigawatt. So it all depends upon the numbers. Like, I can understand you are confused with these numbers. So basically, it is what we produce from this production line. These production lines are capable to produce GTLR and the M10R also. So these are the same numbers.
Okay, thanks for the clarification.
Yeah.
Just one more question. I was checking your current liabilities, which has increased from 9.27 crore last last financial year to 62.25 crore. Could you please share some light on what is the reason for this?
So the increase is due to sundry creditors, so because, if you have seen, we have a good amount of inventory and debtors. So apart from bank working capital limit, there are some sundry creditors, plus there are customer advance. So that also we classify under this head. So there's almost, I think, so 55 crores of uh, advance from customers is there. So uh, these have contributed to it.
Okay, thank you so much.
Thank you. Shubham, we'll take the next question from the line of Mohsin Alam. Mohsin, you can go ahead, please.
Hello, sir. Am I audible?
Yes, Mohsin, go ahead.
Yeah. Sir, so my question was regarding the solar cell line, which you said that total capex will be around 1,500 crores. So, is there any debt to equity ratio in mind of the company that they are trying to keep, or are we going heavy on the debt side?
So, Mohsin, this includes 2 gigawatt of cell line and 2 gigawatt of module line plus working capital margin. So we
Yes,
like
sir.
to keep it in the mix of, you can say 60, two-third, one-third. So one-third
Oh,
of equity and two-third of debt.
okay. And sir, regarding the 800 megawatt line, which was delayed by 3 months, so are we expecting some delay in the coming 2.2 gigawatt line, or things have been taken care of this time?
Things are taken care of this time. So the machines are ready. In fact, just to let you know, it is just like inspection and shipment and the installation at this place. So we are practically at the end of May. We have a June, July, August, September. 4 months are sufficient to take care of this thing. So October, whatever that the commercial availability of production line that we have informed, we will stick to that.
Okay, thank you, sir.
Thank you, Mr. Mohsin. We'll take the next question from the line of Sarang Joglekar. Sarang, you can unmute and go ahead, please.
Yeah, thanks for the opportunity and congrats on a good set of numbers. So, sorry if I'm asking this again. On the gross margin, I saw there was a significant expansion compared to last year and the year before that. So, trying to understand what led to that and what are the normal gross margins that you expect?
So, Sarang, as you have observed that the margins have increased, the main reason is, when we started, we were doing a lot of OEM and Solex brand modules were less. In the current financial year, the maximum is Solex on modules. So this has helped us in increasing the margin. Plus, with the increase of scale and everything, so that has also contributed. Plus, EPC increase in the EPC business has also contributed in the increase of the overall EBITDA and PAT.
Got it. So, just to get a sense of the margin split, if assuming that you do full 100% Solex brand, then what kind of gross margin do you see on modules?
So, we have always said that it varies between 9 to 11%. Fortunately, with the good market and this we have, and with the EPC business. So, but according to us, 9 to 11% is the margin it ranges between.
No, sir, gross margin I'm talking about, not the PAT.
No, I'm talking about the EBITDA margins.
Okay, can you give any color on gross margins?
I don't think so. We are readily available with it. We can.
Yeah, we'll get back to you on this gross margins.
All right. Thank you.
Thank you, Mr. Sarah. We'll take the next question from the line of Kunal Shah. Kunal, you can unmute and go ahead, please.
Voice is audible. Hello.
Yeah, it's audible.
Yeah, Kunal, go ahead.
Congratulations, sir, for and Solex team for good numbers.
Thank you, Kunal.
सर मेरा क्वेश्चन ये था कि आप 2030 तक कितना रेवेन्यू टच करोगे या एस्टिमेट या फिर कितना प्रॉफिट एज्यूम कर रहे हो अभी?
हमने 2030 तक का हमारा विजन रखा है, वो विजन पे हम लोग चल रहे हैं और उसमें काफी चेंजेस भी आते हैं बिकॉज ऑफ द टेक्नोलॉजी एंड जियोपॉलिटिकल फैक्टर्स. So it is too early to comment on the margins and revenue of 2030. बट या हम क्या कैपेसिटी और क्या इन्वेस्टमेंट करना चाहते हैं वो हमने ऑलरेडी पब्लिक डोमेन में रखा था, विच वाज लाइक 2030 तक कंपनी ने 15 गीगावाट ऑफ मॉड्यूल एंड 5 गीगावाट सेल लाइन विद डिफरेंट कैपेसिटी डिफरेंट टेक्नोलॉजी, जहाँ पे हम लोग अराउंड $1 बिलियन अराउंड 8,500 करोड़ का इन्वेस्टमेंट हम लोग मैन्युफैक्चरिंग में करने का हमारा जो एक कमिटमेंट है उसी पे हम लोग अभी चल रहे हैं. बट यस, बीइंग a very टेक्नोलॉजी ड्रिवन बिजनेस एंड कंपनी, हम हमेशा अपने आप को जो मार्केट में जो डायनेमिक्स आते हैं, नए आते हैं, टेक्नोलॉजी आती है, जो सिचुएशन आती है, अकॉर्डिंगली हम अपने आप को मोल्ड करते हैं इन द बेस्ट इंटरेस्ट ऑफ आवर कंपनी एंड द शेयर होल्डर्स.
Okay, thank you, sir.
Thank you, Mr. Kunal. We'll take the next question from the line of Mr. Aman Madricha. Mr. Aman, you can unmute and go ahead, please.
Yeah, hi team. Thanks for the opportunity. So, sir, can you just throw some light on, like, over the next 2 years, what would be the level of debt we would be taking on to expand maybe in the cell line, maybe in the additional module line? So, can you throw some light on that? What would be the debt number that we are estimating internally for FY26 and FY27?
So, Aman, hello. Yes, Aman.
Yeah, Vipul bhai.
Yeah, so you are talking in terms of just the capex debt or the overall debt?
Overall debt, sir.
So around will be around 1,000 crore for the proposed expansion of the cell and the 2 gigawatt of module line, and existing if I remove the non-fund based limit, so around 400 plus 1,000, so 1,400 crores.
So, sir, in FY26, we can expect a number of somewhere around 300 odd crores.
FY26, no, it will increase because we are planning for the cell line. So the utilization will not be there, but yes, we'll get it sanctioned. So utilization will be based on the implementation of the project.
Okay, okay. And in FY27, we will be having peak date, right?
Yes.
Okay, okay, okay. Understood. So, sir, we are telling that we'll take 1,000 odd crores of debt and some 500 odd crores of equity. So that all these things we are this equity thing we are planning to raise, let's say after a year, or what are we estimating internally over here?
So we are talking with couple of bankers, and we are working on the structured model, whether to form a subsidiary or to how to raise it. So I think so within 2-3 months you will see.
We'll be able to comment on that.
And we are approaching investors to raise. So I think so within 2 to 3 months, we'll be approaching investors to raise this 500 crores.
Understood, sir. Thank you, and good luck for the future thing.
Thank you,
Aman.
Thank you, Mr. Aman. We'll take the next question from the line of Mr. Madhur Rathi. Madhur, you can go ahead, please.
Madhur, you need to unmute.
Hello, sir. Am I audible?
Yeah.
I wanted to ask that from natural scenario, are we expecting main this month, since it's already been 4 months that posted last update like on Jan end? This is my first question.
Just can you repeat your first question, Mr. Madhur?
So I will give you clarity that last update we gave was we are expecting migration to main board in January. I mean, that's what when we applied for. So it's been 4 months. So are we expecting anytime sooner? When are we expected to go on board?
Yeah, currently, we are under ESM. So that's the reason the migration to the main board got delayed. Once we are done with this, then there is some cooling period, and then the migration will happen. So right now, currently, we are under ESM.
So you want to say that like by June end, you won't be able to go in main board. Still, you will be submitting quarterly results.
So
Yes.
Madhur will be giving an investor update because though it is not requirement by the SME platform, but as in practice we'll start giving the updates on quarterly basis. And Madhur, we qualify for all the requirements under the new amendments also. So it's just a number of it's just we come out of ESM and we fulfill all the criterias which are required for migrating to the main board.
Right. Can I ask my second question?
Yeah, please.
So I wanted to know that are we are expanding like by 2.2 gigawatt. Are we going to raise any equity by anything to equity?
No, so this current
No,
expansion,
not for 2.2 gigawatt. Yeah.
the current
Yeah,
expansion is
Vipul bhai, go ahead.
the current expansion is being supported through the internal accruals. So fortunately, we have very good cash accruals. So for this 2.2 gigawatt, we are not raising any equity. Plus the last pref allotment which we had done, we have some additional funds which was raised that time. So that will also contribute. So, but as of now, for 2.2 gigawatt, there is no requirement for raising any equity, and our bankers are the debt bankers are also convinced with it. They are not stipulating any equity raise for this expansion.
Right, that's it. Sir, I had another question. You said that from zero ground level, you will need 18 months. That is like minimum for cell manufacturing, right? So I expect that by around 26 end or like financial year 26, 27 end. So by then, you have only planned for like 2 gigawatt of module expansion and 2 gigawatt of cell manufacturing, right?
Madhur, module manufacturing is, it will totally depends upon the demand. Like we did not have a target to go for 2 gigawatt of module line. We had only planned an expansion of 2 gigawatt of cell line. But looking to the demand, we have immediately planned for an additional 2 gigawatt of module also. So it is, Madhur, purely depends upon the demand. Fortunately, at Solex, we have very good reputed corporate clients and tie-ups with the international manufacturers. So it will obviously depend upon the demand and supply position. But yes, cell line we can say we are just starting with 2 gigawatt. Module will keep on adding upon the order book and demands we have.
Okay, so can you just throw a light at what will be a full year revenue and margin would look like if we have a 4 gigawatt of module capacity and 2 gigawatt of solar cell manufacturing?
So cell numbers we have not added because it will be captive use, but just on the basis of the 4 gigawatt of module line, the turnaround will be between 3,000 to 3,400 crores, which will include 200 crore of EPC business also.
And then what will be our margins? Because that will tend to rise, right?
Yeah. So as we said, the EBITDA margin generally we think is between 9 to 11, but fortunately this year we have crossed that mark. Similarly, we feel to maintain that level. And same is with PAT. So with the economies of scale and this, so we are targeting to maintain the PAT level also. So it can be between 5 to 7%.
No, so
Sorry.
No, once you start cell manufacturing, margins
No.
will
So
rise, right?
I have not considered the cell numbers because Madhur, at present the cell margins are very high. By the time the production comes, the margin will come down. But we'll give this the exact numbers when we approach the market for raising equity. So I think so it's a 1 month or 2 months max. We'll have to wait for the cell numbers, to add on to give you the exact perspective of what cell will contribute. But at present, we can tell you with the 4 gigawatt of module manufacturing and the EPC business will range between 3,000 to 3,400 crores of revenue for uh, FY27, which will be full year of operation for 4 gigawatt of module line.
Right. Okay. Thank you. Thanks a lot, sir.
Thank you, Mr. Mridul.
One question was there regarding to the debtors outstanding. So on the standalone basis, the EPC debtors are 69 crores and 69.21 crores, and the module is 42.03. So the total is 111.24 crores. This is on the standalone basis. Some gentleman had asked this question. Our team has just given the data. And with regards to the advance from customers, it is 58 crores of advance what we have on 31st March 25.
Thank you, Vipul sir. Thank you. I would now invite the management to give their closing comments, if any.
Yeah, so thank you very much, everybody for taking a deep dive into whatever that finances that we have and in our business model also. In fact, as we said, this year will be again the year of expansion for us, and so everything will increase. The revenue, profit, then the debtors, creditors. Those numbers are so dynamic because we are expanding continuously and increasing our manufacturing capacity and efficiency both. So I'm looking forward to have a similar support from everyone. And in case if you feel like you need to guide us somewhere, we are always open to hear from you. Thank you very much, and thank you for your time.
Yeah, so I'd like to add some point, like, one of the gentlemen had asked regarding the new lines and the capacity expansion which is happening in the sector. So at Solex, we can say we are among the few companies, or we are the only company who are dealing with the top brands of the China. And this have helped us in building a lot of best efficiencies and best practices of the industries. We are among the few companies who have full-fledged testing facilities in the company, and we are adding more and more testing facilities according to the international standards. We were the first company to launch one 625 watt peak panel that is called the that is Chetan, you can name the technology. TAPI R series.
G12R.
G12R. We are among the few companies where the entire production line is on the MES software, that is the manufacturing execution system software. So this software gives a very good comfort to all the IPP players, the big players. When they come to voucher factories and the auditor factories, they spend a lot of time on the, rather than going on the floor, they like to see our MES software. So there is a lot of transparency built in the entire process, and this gives us a very good position in front of the big IPP players. So though Solex was a very new entrant in this activity, but because of the efficiencies, the transparency, and the quality control we follow, we have developed ourselves as a very good brand when it comes to efficiency and the deliveries. So I think so this will make a difference where we can stand apart from the other players, and that's the reason we have top names of the industry as our customers. That's it. Thank you from our side.
Thank you.
Sir, for
Thank you
further
very
queries,
much.
Thank you,
sir, for
everybody.
further queries, can we mail at Captify ID?
Yes, please.
Sure, sir.
Thank you.
Thank you, everyone.
Thank you.
Yeah.
Thank you.
Bye-bye.
Thank you, Chetan.
Thank you, sir.
you.
Thank you, sir. Thank you to the management team for giving us the time, and thank you to all the participants for joining us on the call. This brings us to the end of today's conference call. You may all disconnect now. Thank you.
Thank you.
Thank you.